we were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. This podcast is different than a lot of the others that I've listened to in that we don't only help real estate investors, but we also dig into the content creation behind that. So if you're a real estate investor or if you're providing content to real estate investors, this is the podcast for you. If you like what you hear, maybe even if you don't, help me out. I'm trying to reach more people. Give me a 5-star review and share it with a friend. Speaking of friends, I've got one with me today. Jim Black. Now, we've known each other for a little while now, but it's just through a little podcast swap. So I'm excited to get to know you a little bit better today. What I do know is that you've helped a ton of people get into home ownership. I think, what was it, like over 8,000 people you've helped get into homes. So you're definitely an expert when it comes to loans and mortgages, but you're also doing some real estate investing and developing yourself. So I want to get into all of that. So take me back, man. How did you get involved in real estate?
Yeah, thanks again, Kevin, for having me on. I'm honored to be on your show and looking forward to talking with you today. So like you, I have a passion for helping people with big decisions in life. And in 2001, I was a trader on a Wall Street firm called Hambrick and Quist, and we were a market maker, which means we helped companies go public, and we bought and sold their stock and helped them trade their Rule 144 restricted stock. So let's say a CEO of a major company wanted to sell their shares. They would have us place an order and strategically buy or sell shares for them to try to beat the average price for that specific stock. I learned a lot about how to make wealthy people wealthier, but I didn't leave an impact with people in terms of helping them get ahead in life. So I got recruited to mortgage in 2022. And from then I've been doing mortgages ever since and real estate ever since. And like you, everyone has a unique story. So I love learning someone's story and how I can help and hopefully leave an impact on their lives for the long run. So that's what I'm all about, is hopefully giving someone the tools that they need to make a great decision around wealth and real estate.
Wow. So 2001, that brings me back, man. I was just getting out of the Army at that time, as you know, and I bought that first house. That was right at the .com crash. So you were in it. You were in like the stock exchange. How did that go?
Yeah, it was wild times. So as a 22-year-old, pushing a button with your, like a mouse button, it was crazy to push a button and make someone a millionaire or billionaire at the same time. Yeah, at 22 years old, like who has that crazy kind of control? And then I pushed the button again and maybe they lost the same amount of money. So it was very strange to be in an environment where I could not relate to any of my friends, my family. They didn't believe the stories I was experiencing. And so it was a very small group. We had about 18 people on our trading floor, and we represented about $50 million of profit for the investment bank that we were part of. So it was a very important job, very stressful job. 2 of my coworkers unfortunately passed away of stress. And I realized early on in life that whatever I do, I want it to be a marathon, not a sprint, because I want to enjoy the things that I am involved with. And like, you know, it's never a dull moment in real estate, but we also hopefully have life balance and not as much stress as pushing buttons to make millions or billions of dollars or losing the same.
So, and you mentioned when you were trading, it was restricted stock. Now I'm a real estate guy. You're a real estate guy. I don't understand the stock market.
Sure.
Okay, but help me understand, how do you sell a restricted stock? It's restricted.
Sure. Yeah. So every company that goes public or even private has different types of shares. Now, I'm not a financial planning guru, but there's different classifications for shares. If you're a major holder of a publicly traded or privately traded company, you have windows of time where you're allowed to sell your shares. So there are restricted windows that open certain times of the year.
I see.
And as an insider, you probably have more insight as to what the company financials or success looks like. So they give you these windows of time. You can only announce the sale of so many shares you're going to do and a certain percentage of what you own. so that you can't just dump money on the market, or you can't just buy all the shares because the company's doing better than anyone knows. So in those windows of time, the founders, the board, the executives say that they want to place an order. I'd like to sell 10 million shares. Jim or trader, allocate these shares how you think is appropriate to get me the highest level of return in that window of time. So it's pretty stressful because one person in particular has at the time the #1 search engine website in the world. Was not Google, but the other one. He's like, my nickname was Jimmy Black. And he's like, I want to meet you, Jimmy Black. I'm coming to the floor tomorrow. I'm like, great. And this is before Zoom and before video cameras. And he comes and he goes, are you kidding me? You're Jimmy Black? I'm like, yeah. He's like, what the heck? You're a kid. I trusted a kid to sell $100 million of my wealth. And I'm like, how'd I do, Mr. So-and-so? And he goes, you beat the average. Great job. I said, great. So is there a problem? He goes, no. I'm like, great. Well, I'll talk to you tomorrow on the phone. So it's just wild to think about people in different levels of expertise. I learned early on that you can't judge a book by its cover, and that we all can add value in different ways by our experiences. And I know that you deal with that a lot too with your audience and your clientele. You've had a lot of homeownership experience, right? You've owned tens and tens of properties and a lot of action that goes on that people don't realize until you talk to them. So I don't, like I said, don't judge a book by its cover. I give everyone an opportunity to share and provide value.
That's amazing. What an amazing story. And I can understand completely why you might want to get out of that business.
Yeah, it was not easy. I'd wake up in the middle of the night and I would wake up trading in my dreams.
Oh, gosh.
And I'd be screaming out symbols, stock symbols, and that kind of stuff. I'll give you one more thing about trading, which is interesting. Most people don't understand how the exchanges work. And it's as simple as this. If a stock has 1 to 3 letters in it, it is on the New York Stock Exchange. If it has 4 or 5, it's on the NASDAQ. That's as simple as it is. So Microsoft is known as Mr. Softy, MSFT, Mr. Softy. It's a NASDAQ traded company. Another example of that is the letter T. That's AT&T. That's traded on the New York Stock Exchange. So it was a very dynamic opportunity, and I was very thankful for it. But I'm very happy now that I get to help people and make a difference in their lives for their families and hopefully generational wealth.
Hey, you're actually making a difference now.
Yeah,
I can imagine
it.
you didn't feel like that on the stock exchange. I mean, $100 million to this gentleman.
Yeah.
Probably meant less than one of your first time home buyers, right?
Yeah, and it was just weird because some of my coworkers would have good days where they'd make $5 or $10 million profit. They thought it was their own money, so they would go out and do a $5,000 dinner. Like, I lived the Wolf of Wall Street life, minus the drugs and some other bad stuff. But like, these people could not separate reality from from their job, and it was very sad to see that people would just spend all the money that they had and not realize that you're not going to get the $5 million you make. You get a very, very, very small fraction of that. But I get to stay humble from the beginning with that experience, and I try to be humble and try to put myself in the other person's shoes always, and just try to make sure that I leave an impact, give someone some information that they can make a better decision with.
Yeah. So was it like the trading floor, like your phone's going in both hands and just like,
yes, it was
super high pace?
Yeah, our company was acquired by Chase, and then JP Morgan bought or merged with Chase. So we were on the West Coast, which means our hours were from 4 a.m. to 1 p.m. because we were 3 hours ahead of New York. And it was wild. We had a phone graveyard for all the phones that were broken. We had, we had flat screens when they first came out. They were $10,000 each, and they looked like, basically you could like cook food on them. They were so hot. And my old partner used to break those all the time. And there was fights on the trading floor. our own HR department had to give 48 hours notice to come on our trading floor. Their key cards did not even work on our trading floor at the same company. So it was just wildness beyond
Wow, that
bounds.
really is the Wolf of Wall Street. That's
Yeah,
crazy.
it was wild. And I'm 22 years old, living in San Francisco, enjoying my life, and all my family was there. So it was hard to luckily I had great distractions. I got a dog intentionally so that I wouldn't go to the bar every day like everyone else. So I was trying to be the best I could at age 22, but I could keep up with the group when I needed to. But it was a wild time.
Yeah. So that's a great experience for you. What's one thing that you learned from your time on the trading floor that you use now?
Yeah, great question. So I try to be a good listener and always be a student. On the trading floor, we used to manage about 50 stocks each, which means any order in that stock I took care of for the entire company. So I always had to be focused, attentive, and listen and feel where the opportunities were. It's similar in what I do today, where you and I have to be great listeners to make sure we fill the voids of what's needed. Big banks and big companies just offer one product. It's a cookie cutter solution. Here you go. You and I offer creative solutions that are customized to the needs of the borrower. I always try to explain myself that I'm going to work in the best needs and interest of the client, not the banks. And when you do that, you have the best approach to helping someone, and you're unique, and you can truly offer a better solution and stand out as someone who cares and is creative and listens. And so the listening part, I think, would be the biggest takeaway.
So your primary focus right now is originating loans. These are mostly conventional loans, yes?
Yeah, I do mostly conventional loans. I've been lucky. I had some good mentors along the way. The simple way I look at my job is the person that is involved closest with the relationship, involved with the transaction, gets rewarded the most. So I made a smart decision early on in my career. Since like 2005, I've never taken on a role higher than a producing owner of a company, because if you're not producing and you're not able to listen to the needs of the client on a regular basis, you're no longer relevant. So I've always stayed in origination. A lot of my peers and friends have gone on to lead bigger companies, but bigger companies don't necessarily mean a happier lifestyle, more flexibility, or even more wealth. Because as you go higher, you're counting on more people that may not be aligned with your same values or have the same motivation or passion. So I have been in origination. I will always be in origination. And that's what keeps me excited about the next day. I don't know what's going to happen tomorrow, but I'm looking forward to it.
Yeah, what I'm thinking when I hear you say that is what the origination side, any sales type of role, you really don't have a ceiling on your income, right? You can kind of create that. And for you, if you listen and you help and you can create relationships with your clients, which you're very good at, then you can create a lot more income and wealth. But as you move up, like let's say you go to a sales management type role, they actually get comped differently and oftentimes less than what a good originator. Is that your experience as well?
Absolutely. For a simple rule of thumb for our audience or for other listeners and looking to get into our industries, you make about 15% managing someone as you do doing the actual transaction. So to make up that 15%, you'll have to do 6 or 7 times as many interactions or transactions just to make the same income as you would do doing it on your own. So most people like management because it's more predictable and less stress. But I've always liked to stay in origination because I want to help people. And I have a simple name, right? Jim Black is a pretty easy name to remember. So luckily, I've been able to have a lot of past clients and repeat clients just because I hopefully left an impact for them. And again, my name is very easy to remember. So it's been a really good career the last 22 years now. And I've been lucky to, like I said earlier, help about 8,500 families with homeownership.
So Jim Black, easy name, easy to remember. You don't go by Jimmy Black anymore. That was
No,
just...
that was definitely that was my trading name. And when I'm in trouble with my parents, they call me that, and I'm like, oh, I'm in trouble. But
Oh,
yeah,
did they throw the middle name in there also?
yeah, exactly, totally. So
Yeah, I do that. I can catch myself sometimes doing that with my own kids. Like, oh my gosh, I just used the middle name. I remember growing up how that was. That's funny. Okay, so primarily originating loans. You do a lot of sounds like first-time home buyers. You're really helping people get into the real estate, getting into real estate. You work with investors too, though.
I do, yes, I do. My favorite types of clients to help are veterans, first-time home buyers, and seniors. And the reason I bring up those three categories is seniors, I love helping because it's hopefully the last financial decision they're going to make in terms of moving or buying real estate. Hopefully that can make sure that they're set correctly for the golden years. First-time home buyers on the extreme opposite. I want to make sure I'm making a good decision to set them up to get to retirement as soon as they can. And then veterans, I love helping just because they've given a lot to protect our freedoms. And I'm not super political, but I just feel like it's an honor to help people that have protected us and our freedoms. And whenever I get to help a veteran or I meet a veteran, it's always thank you for your service. Honored to be part of this journey with you, and really spend the time and energy and focus that they need to get the right decisions.
That's really cool, man.
Yeah.
I was a mortgage broker for several years before I just couldn't handle it. It was just like so much guidelines and restrictions and different underwriting decisions. And so I just wasn't a fit for me. So kudos to you. The first time home buyers, there's so much emotion in that, man. I was like, I don't know if I could do this. So, but that you enjoy that because that's where you feel like you're making a difference.
Yeah, absolutely. And again, it's not the paycheck, it's the reward I have now at this point in my career is just helping people and knowing that at the end of the day, like I'm making a difference, and that feels really good and rewarding. So
yeah. So I'm assuming after 8,500 deals, and it gets to a point where like it's not about the money anymore.
yeah,
I remember for me when I had that shift where I don't need the commission and I could just really focus on providing the best value, my income shot up.
yeah, absolutely. When you pay it forward, you have the mindset of knowing that you're doing the right thing, and that's the leading force of it all. That's what it's all about.
That's pretty amazing.
Yeah, it's cool. Very cool.
So the first-time home buyers, this has come up a lot. I do a lot of research on the economy, and I'm always trying to stay current. And, we have an inventory problem, as you know, across the nation. I think there's about 1 million listings, which has never been that low ever. And some of the feedback I get, Jim, is, well, the inventory is coming because all these baby boomers, they're moving into retirement communities, or they're unfortunately moving on. And these houses are coming on the market without them buying a new house. So it's not like an exchange. It's one unit of inventory. Well, my pushback to that is, baby boomers might have been a larger cohort.
Yep.
They were.
Yep.
They aren't anymore. The millennials are the largest cohort, and they're the ones with the first-time home buyers. Are you seeing a pickup in buying and demand even faster than what we're seeing inventory increase?
Yeah, great question. So a lot of studies have come out recently that every 1% decrease in rates is about 5.5 million more millennials that can qualify to buy a home.
Whoa, that's amazing stat.
It's crazy, right? So think about that. If rates go down 2% again, we'll be at another 11 million people 11 million households that can buy properties, and we're building less than 1 million homes a year.
There's only 1 million active listings.
Yeah, it's crazy. So I don't believe families are going to move as quickly. I think they're going to be looking to buy before they sell, purely because I'm not going to give up my property at a low tax basis at a better rate to move somewhere that I don't know I'm going to move to.
Right.
So they're waiting to find that next property. So it's creating this whole kind of stall out, in my opinion. I don't see the stall out changing very much unless something drastic changes in the marketplace. But one thing to counteract that is that life events happen. And so if you don't have to move, you're more likely not to move. But if you have twins or get divorced or have a death or a promotion in your life, sometimes that is a differentiator in rates where it does not matter. So I think you'll see life events play the biggest role in determining inventory for the next probably 18 to 24 months until these houses get built. And builders aren't excited about building. Where I live in California, it's not exciting to pay $65,000 in a hookup fee for water.
Yeah.
It takes away most of the profit on anything less than a $1 million property. So you're seeing people build at a higher level and higher cost. It's not helping the affordability issues in many of these cities and municipalities.
Yeah, interesting you bring up California, because I've seen that, and the nationals, the big guys aren't really going in there because those are cookie cutter, low margin type stuff. And you're right, your price point, they have to be like almost custom to make any money.
Yeah, custom and paid with cash. Like,
Yeah,
I have a builder in my area. I live on the coast. I live in Santa Cruz County, right on the coast, about a block from the ocean. And I talked to a builder, and I'm like, hey, do you need help on construction financing? He's like, Jim, you won't believe this. I am booked out with all cash projects for 18 months.
Oh my gosh, that's crazy.
What? So again, there's a very big pent up demand for people wanting to stay in their property. And as you know, ADUs are becoming more and more popular because these larger lots are getting rezoned or recommissioned to be able to have more multifamily property living situations. So you may be able to have a 400 square foot ADU where your parents can live, or your parents have you live in it, if you're a millennial, for example. There's a lot of different ways that people are starting to live, and a generational element versus it being, I have my house, you have your house down the street. So it's very interesting.
ADUs is a very interesting topic, Jim, because it's popular, and across the nation, you're hearing this might be a help solve the inventory issue. But what we found in most markets, California not falling into this, by the way, but what we found in most markets is it's cost prohibitive. Like, it doesn't add enough value to a property to do it. Rent value or actual resale value. Now in California, why I say it's interesting is they passed a law there, right, that says basically ADUs are allowed, zoning across the state. But locally, they're doing setback requirements, they're doing height restrictions, they're doing all these different things that are still preventing them on a local level. I've read that. I don't know if that's true. What are you seeing?
Yeah, so in California, where I live, very high cost to live here, obviously, right? People love the weather, but don't love the bill they get for the weather. What California did was they went to every single county and city and said, to get money from the state, you have to follow the general plan of creating more affordability and units in your marketplace. So for example, in our county, Santa Cruz County, they have to get something like 6,000 or 7,000 new units permitted in the next 5 years. In the previous 5 years, they've only done about 300-400. So they're having to rezone the entire footprint of the map, so to speak, the zoning map. And that's just to be able to get the same allowances from the state to stay afloat. So counties are scrambling right now to find ways to add units to get to those mandated numbers, which is a 5-year window of time. So we're going to see a lot more vertical development in compact areas, which does change some of the scenery and feel of these towns, but we got to build it somewhere. And I'm not going to move from a block from the beach. I'm not moving to the desert. I'm going to fight as hard as I can to stay in my house for as long as I can. And so I think you're going to see this kind of combative area where some people are fighting for these restrictions to not go through, and others are trying to maximize them. And like you mentioned earlier about ADUs, the average price per square foot or price to build per square foot for an ADU is about 4 or 5 times that of building a bigger home. So you could do a 800 square foot addition on your house versus do a 200 foot ADU and it'd be the same cost, which is pretty crazy.
That's pretty amazing, right?
Yeah.
I didn't realize those numbers.
Yeah, it's wild. And again, it's different throughout the country. So obviously work with local professionals that know the market and know the codes and all the stuff that goes along with it. But it's that's another element of our job, right? We got to know our marketplace. We have to know all the different elements and variables to make a good decision. that's why I think our job, your and I job, is going to always be here, because everything is not the same. Our clients' objectives are not the same. The type of house they live in is not the same. Their needs aren't the same. Maybe they have kids, maybe they don't have kids, maybe they like having a big backyard or a big house. They like to have a view of the city or a view of the lake, whatever it might be. So we're going to be in business for forever. I think it's one of these things where that's what makes this country so unique also, that we can all live in a different way, hopefully not affecting others negatively, obviously, but hopefully letting someone have their dream of home ownership and sustain it and pass it on to their family.
This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. I agree with all of that. And I'm thinking there's so many different ways to make money in real estate. So I'm on the private lending side, obviously, and you are more on the conventional lending side. You're doing some developments too, which hopefully we have time to get into some of that. But I want to try to help our listener the best we can, extract some knowledge from you,
Sure.
Get some advice from them. So we talked about inventory and the problem there, and hard to find deals. And I know you work on a lot of first-time home buyers, but real estate investors are experiencing it too. So what advice would you give our listener that's struggling locating something to buy?
My big thing is, no matter what you're looking to do, think long run. And what I mean long run is think 10 years out. If you can't see yourself either owning this property as a place you're going to live and raise your family, or have it as a rental property, or have it for your family or grandkids or whatever, then you probably shouldn't do it, because a lot of variables can change. And it's not about what you pay for today. It's about the value of that when you ever go to sell something, or down the road when you do something with it. And so a lot of private equity firms right now, for example, are taking that approach, and they're buying 20 to 30% of all single family homes and units available throughout the United States, because they know that they may be paying, maybe they're paying 105% of the value today, but they look forward 10 years down the road and say, the cost of inflation, the cost of labor, cost of permits, population growth, the longevity of someone living in their house, interest rates may be going down. They look at the same factors as an investor as our clients should look at for making a good decision, because we don't want someone to go in and have to look at Zillow or some other prop tech company every month to see the value of their asset. That's not the goal of truly owning a house, in my opinion. It's to enjoy home ownership, the pride of home ownership, or the pride of being an investor, or have a second home that you enjoy with your friends and family. If you have a 10-year horizon on that, you're in a very good position to be rewarded by making a decision. If you can't see that far out, maybe you shouldn't do it. It's good to be prepared, to be educated around it, but maybe it's not the right thing to do.
So just keep renting for a while if you don't know, like,
yeah, it might be the right. Again, everyone has different objectives, right? So the first thing they have to do is understand their objectives. What are your objectives? Are your objectives to be close to a great school, to have your 3 kids, be in that school district? Is it to downsize to be closer to your grandkids and live on the beach somewhere? Is it to have 85 units and have passive income? I just think it's important to drill down your objectives with your professionals that you trust in your circle, to make sure that you guys are all on the same page, that you vetted every element of the decision you're making. And then the job's easier, because then it's like, great, I have my whole team around me supporting my decision. They know what my best interests are in mind when they're giving me advice. it makes it a whole lot easier to make a decision. So that's what I would say.
So get the team on board.
Yep.
When everybody on the same, it's like, what's a term, like get the right people in the boat and just make sure you're all paddling the same direction.
Exactly. Then that'd be perfect. Just get to the other side, make the adjustments at the end when you get there, but get across whatever, whatever unknown, lake or water that you need to get across.
All right. So we talked about your trading floor days. We talked about lending quite a bit here and some of what's going on in the market. Now you're a real estate developer also, and you had some pretty impressive projects, it sounds like. What came first? The developer investor side of you?
Yeah, great
or
question.
the lender
So
side?
yeah, so what I did, starting in 2019, when our market was very strong for us for residential lending, I took the money that I made in that and reinvested it in companies that were helping me improve my business. So again, I'm an originator, so I'm in the trenches. So I have all these fintech, which are financial technology companies or tools to help us, you and I, do our job better. If it's a client relationship management tool, if it's a faster, more effective way of doing the transaction, whatever it might be, I study these all the time. So in studying those, I got to invest in 6 companies and be an angel investor and early advisor in these companies. And when you're that early on in the stages of developing these products, you get to go through a lot of brainstorming, a lot of creative ideas, and with a lot of unique and sophisticated people. One of these investments I made was in a company called Wiki Realty, WIKI Realty. They built a tool known as a Chrome extension that allows my information to be on any website on someone's computer, overlapping Zillow, Redfin, Coldwell Banker, whatever company it might be.
Oh, that's crazy.
Pretty cool,
Sounds
right?
a little
So
Big Brother.
yeah, exactly. So they're seeing Jim Black everywhere. Well, Jim's everywhere. God, it's crazy. And my partner on that, his name is Sanjay Kutumpura. And about 4 years in, he goes, Jim, I know that you know I'm a tech guy. He's like, but I never told you this, but my dad, my brother, and I were builders in Wisconsin and we've built 4,000 homes over the last 30 years. I'm like, what? He's like, yeah. And I have this development we're getting back into in Wisconsin. And I'd love for you, if you want to be an investor or part of this, we'd love to offer this to you because of your involvement with Wiki Realty and the fact that you are a partner on that. So I'm like, great. So I knew nothing about development. I knew nothing about, how this works and entitlements and how you get projects approved. So I've been very lucky to have been brought in by someone I know, like, trust, and look up to, that has had decades of experience doing this. So to me, you have to go with someone who's had the experience of both good and bad outcomes, by the way.
Yeah.
If someone, you have to have the experience to know what to look for in a good way and some of the pitfalls that come along with it. So we've been in the process of developing this property on entitlements, and we're now at a stage where we're going to be building 705 homes in Wisconsin. And it's going to be exciting because that market that we're in is short 1,000 homes a year right now. So we're going to make a big difference, like we talked about earlier, an impact on that community that is there, that has a lot of big companies and corporations. So we've been working with the corporations to help figure out ways to give incentives for the employees. We've been working with the municipalities to give offsets to help us build in things like schools and parks and that stuff. So it's been a really fun evolution of going from helping someone with a loan to helping build a community. And it's been about a 3-year project. We're going to be breaking ground on that very soon. And it's a very exciting venture. And yeah, Wisconsin from California is like eons away. So I'm a big believer in seeing it before I invest in it. So I had Sanjay and his family drive me around all of Wisconsin for 3 days to every single home they ever built. And it was really cute that
4,000?
Yeah, 3,000 homes. And all of their developments, Sanjay's father named all the kids' names as the streets. So it was really cool because in each project it was like, oh, there's Vincent Street, there's Sanjay Street. And it was kind of neat because it's all the same names in these different communities, hundreds of miles away. So it was really special. So I want to leave a legacy in that, knowing that it made a difference in the community. And that's, I think, as a developer, with my developer hat on, that's been a really cool thing to understand all the moving parts. And I look at things in life as having currents and subcurrents and maybe going in different directions. And with development, there are a lot of things that on the surface look like this is a good thing to do. And when you get to the bottom of it all, it might not be. Maybe there's some type of traffic control study that would hurt the traffic in the area, or environmental things, or maybe building positive things in the community, like bringing in stores or businesses and new services. So it's been a really good experience. So that project it's pretty awesome. It's over 270 acres and 705 homes. I'm hoping that some of the names of that development are my daughter's names, Charlie and Zoe. So I'm going to be asking that when the time comes to put some of our names in there as a cool way to be like, hey, if you ever want to go to Wisconsin, go look up, we may have a couple of homes out of this too, which is exciting. So
That's
we'll
amazing.
see. Yeah. So
I was just going to ask if there was going to be a Jimmy Street.
it would be the worst street on the block. It'd be the worst street on the block, and they'd be like Trans Ams on like cinder blocks.
Oh yeah.
It would not be the best street. Thank you for that.
That's funny.
That's
I
good.
did a development, 80-acre development in Colorado. And when it came to the street names, we were debating that. And you know what? We ended up letting the city decide, because that helped earn some whatever.
Yeah. Yeah. What are you excited? Tell me what you're excited about, Kevin. Give me some of the things that I've been talking a lot, but I always enjoy talking to you and getting your perspective. And
yeah, man, I appreciate that. I'm excited about a lot of things. I'm excited about the economy because it's very confusing and people are concerned. And whenever you have concern and confusion, you have opportunities. So we can't go into a whole lot of detail here, but I absolutely think there's opportunities here now and in the future for real estate investors.
cool. There's an Albert Einstein quote. I think it's something about the law of work. Out of clutter comes opportunity, something like that. I'll send it to you later, but it's just basically, yeah, like you mentioned, like when there's uncertainty, that's when people count on us to provide experience or knowledge or tools to allow them to make the best decision, right? It's kind of like falling off into the abyss. If you don't know where you are, it's hard to navigate. So we're navigators. We're helping people find their way in their journey ahead. And it's awesome when they can come to us in that stressful time to be their trusted person.
Well, let's talk about some of the ways you're helping. I know you're a broker, but you also provide some content. I mean, we met because of your podcast. So
Sure.
Tell us, what are some of the things you do to educate and help your clients?
Absolutely. I have a saying that I like to use: know before you owe. I turned that into a podcast and YouTube channel. And to me, it was just, how can I give advice to people before they make large decisions, and learn from people like you and I, or a real estate attorney, or whoever it might be, of things that they wish they would have done 20 years ago that we can learn from today and make better decisions from, right? So I like to interview people like yourself and just get their story. Everyone has a backstory. Everyone has a different way of becoming successful, and they also have a story of maybe some things that aren't as successful that they wish they avoided. And I think just being transparent and genuine and authentic and raw is a good way to live life. And so I try to give back to my clients and my audience and my community by sharing more about those experiences with other professionals, and listening to a podcast while you're walking your dog or driving to work. It's pretty easy. So I try to be in the form of the least distraction, but something that can complement someone's day. So YouTube, LinkedIn, Spotify, Apple, all that stuff I have channels for. And I just brought on my best friend, one of my best friends, high school buddy of mine. He's the #1 YouTube rated realtor in the country. His name is Jason Walter. So I'm really excited to partner with him because we're going to be able to share a lot more information. He has over 100,000 followers that are active. And that's powerful because it's just a great way to give people more insight. They don't have to use me. They don't have to, it'd be great if they use me, but they don't have to. But it's just a way to impact more people, right? It's getting back to that passion of making a difference. So I'm trying my best. I have a face for radio, as they say. So I'm trying my best to navigate my vulnerabilities, which are, being uncomfortable on camera. But hey, you just got to do it. You got to be, if you believe in something and you're passionate about it, I think it's easy to explain in any format or any forum because it's just genuine. And so I love people that are genuine. So the more of these I get to do, the more connected I feel, and I get to learn as much as I educate at the same time. So it's a win-win.
So your buddy Jason, are you able to jump on his channel and try to help his subscribers?
Yes, we're working on that now. He just joined our team this week, so it's a brand new thing. And when it's your oldest buddy, it's kind of awkward because we look back, we graduated high school 30 years ago this year. And so kind of funny to look back at the photos. So we're going to do this whole photo rollout of all these photos over
that'd
the years.
Be fun. That's cool.
That'd be fun, right? And again, hopefully we get to reconnect with our old friends and people we knew from the past. But he's still in the market that I grew up in. I moved away. I was from Sacramento originally, and he still lives there. So it's kind of fun to have that connection still, even though I'm not there anymore. It's fun to have someone there that you have a lot of respect for. So we're going to do some fun collaborations. He gets a lot of followers in Texas, Florida, and California. So we have a huge audience across the country, and I'm licensed in all those states I mentioned, which is good too. So it's kind of a fun way of being diverse and then also helping other people I would never have met before, right? Zoom has been one of the best things that's come out of COVID and out of all this stuff. Like, we're lucky to have this experience. I would love to meet you in person one day, hopefully soon, but I feel connected to you because I can see you and know you're a real person. So I'm really thankful for those tools because hopefully it gets our message and our tools out to more people to make a decision.
So that's all. Yeah, I agree. And YouTube has done that too, right?
Yeah,
you're making a connection. Maybe it's only one way because they see you, you don't see them, but it still is a legitimate connection there.
Yep.
So on this YouTube, how do I ask this? So in YouTube, usually there's one of two strategies. One is, really target a very select smaller group and you're trying to convert them. And when I say two strategies, I'm talking about monetizing the channel. So you can convert if you have loans to sell, houses to sell, something like that. Another option is through like affiliate or ads, right? So actually getting a wider net, a much bigger audience, and maybe you're not going to sell them a loan, but they might buy an affiliate product or something like that.
Yep.
So do you know what Jason's, fantastic following. Yeah. What is his strategy there?
I think it's evolved. It started, and you should have him on your show, to be honest. It evolved for him where he started just giving information and news about Sacramento. Then he reached out and did Northern California. Then he reached out into California. And then his audience was asking questions about, or his following was asking questions about, hey, do you know any information in Texas or Southern California or wherever? And then he took a more national look at things. So he grew organically during COVID when people couldn't go meet with their mortgage person or realtor or were in lockdown. He has monetized it, but his goal is to really build his brand and get referrals to be able to refer to other agents across the country.
Yeah, so it's kind of like why you and I are in it, right? We want to give back, obviously, and I love getting those phone calls or emails, or sometimes they're even handwritten letters like, hey, because of you, this happened to me.
Yep.
That's definitely one of the reasons, but also, we just want to network and do deals.
Yeah. So, and we're in this industry, as you know, I think about 65% of the loan officers have been out of the industry now for the last 12 months. So been a big mass exodus. On the real estate side, I think we're going to see at least 50%. So I want to be surrounding myself around like-minded people that are in it for the long run and have the tools and success and model that I want to aspire to be like. So that's why I do what I do. And yeah, these conversations are awesome because it's worth every single moment to be on them. And just even if it just reminds you of the core values you stand for and that you're doing the right thing, that's a win in itself. And
Totally.
and sometimes you can learn also what not to do. Like there's a lot of bad actors on social media, give the whole get rich scheme quick thing. And I'm like, okay, I'm not going to do what that guy does. Whatever that guy says, I'm going to do the opposite because that's a turnoff. So
he rolls up in his Rolls Royce and it's like, did you rent that?
Yeah. Oh, the jet. I like the private jet one where they're like, when they're renting a private jet.
Yeah, that's funny.
Yeah. Anyways.
Cool, man. Well, we got to wrap up here. Is there any final pieces of advice? I know you just mentioned there's a big exit in the industry, both realtors, lenders, all of that. So things are changing. What kind of advice should we get?
Just work with local professionals that know the market. There's a reason they're local. There's a reason why there's community involved. Just make sure you get a couple good perspectives and make sure that everyone that you have in your wheelhouse of advisors is connected together. There's no reason why you should not put them all together and make them be the chairman, the board that surrounds you and your family around any big decision you make. And that's, I think, the most important advice is make sure you get your hub of people that can help you, and they would all complement from that also, because they may need a financial planner, they may need a CPA, they may need a real estate professional or an investor or developer or mortgage person or private equity person. So surrounding yourself with your team, even when you're not needed, is the key. And I think any quality professional would see value in that and want to be part of that team. So
cool, man. So how do we get a hold of you?
Best way to get a hold of me is super easy. Meet Jim Black, like the movie Meet Joe Black. MeetJimBlack.com is the best way to get a hold of me. On my website, you'll see all my information. That's the simplest way. Again, simple name, easy to remember, MeetJimBlack.com. And I'm excited for talking to you soon, Kevin, because you have some exciting things in your life coming up that I don't know if I can share or not. So I look forward to celebrating you virtually in the next few weeks here. And I appreciate you always. And thanks for being a good leader in the marketplace. It's
I look forward to that,
always an honor
Jim.
to talk to you.
So I'm going to do a quick recap here, and you're going to tell me how I did.
Okay.
So I've really enjoyed our conversation, Jim. As always, it's been great. So you said early on that in this business, you have to really enjoy it. This is not a sprint. This is a marathon. So go look for the long run. You said that a couple of times, and you said play the long game. 10 years out was the number you used. You need to be a good listener if you're going to help, and you need to really focus on helping your clients. That's going to be the best way to attract business. Get your team on board. And I said, make sure you're paddling the same direction. So we're on the same page with that. Work with people with experience, work with local pros. And you mentioned team multiple times today. So this is super important to you. Obviously, you feel like having a good, solid team is one of the keys to success, is what I'm picking up on it, just because the number of times you said it. How'd I do?
You did great. And you were a listener, right? You took it, you listened. So that was one of those traits right there. So thank you so much. And again, you hit all those points very well. So you get 11 out of 10. Thank you.
Fantastic. Yeah, you were great, man. So thank you so much for coming on. Thank you for giving us your time. I know the listeners are going to really enjoy this. And to you, the listeners, thank you so much for tuning in. I hope you enjoyed it. I hope you give us a 5-star review, and I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.